Today I'm going to talk about, small business owners and what you need to do to make sure that you're always going to be thriving as long as you want to. Just jump right into it. Number one, right, is structure. I see so many small business owners just go right through this, Formula One racing, zoom, right through it, they skip it. And then everything's going well. And then, a year and a half, 2-3 years, the wheels just completely fall off on pit row and you can't get back in the race because it's devastating, guys. You have to have the right election, right? And, obviously we know the straight sole proprietor, we have the LLC, and the LLC can be taxed as a sole proprietor, it can be taxed as an S Corp, a partnership if you have 2 or more people doing, a venture together. And of course you have the corporate statuses, right? You can go straight to an S Corp, you can go straight to a C Corp. But you have to understand, what am I doing? What's my business doing? What's the purpose of my business? Am I doing a service? Am I doing a widget? Do I think I'm going to be profitable in year 1, 2? Is it going to be a 3, 4, 5 year journey, right? And do I need money? Here's a big one. This is a big one. I see a lot of people do, LLCs, and they'll either go S Corp or sometimes they'll go straight S Corp, and they don't need any more money. I mean, they already have the passive income. They already have the, all the other income. They have maybe a spouse that has a heavy W-2. Maybe they have a W-2 already. So guys, be careful. The right structure here is going to save you a lot of headache and of course a lot of money in taxes. But it is important that you talk to your CPA, your advisor, and do the exercise of, what is your business? What is it going to look like? What do you expect it to be? What are the goals? And equally important is what is your current finances, right? And how much money do you need? Are you covering that? And do you need any more money? Because that could change the structure from, let's just say, being a flow-through entity like a LLC as an S Corp or a straight S Corp to something like a C Corp, where, you leave the profits there, you reinvest them there. And, if there's some tax, maybe they're taxed at the flat rate, federal purposes as of today, 21%, as opposed to bringing more income to your personal tax return where maybe you're already at the highest, percent level for the IRS. So remember, all of this takes incredible planning. That's number one. Number two, organization. None of this can take off for you, right? Whatever great goals you have in your business of, I'm going to go from 0 to 1 million to 5 to 10, whatever that is, none of that can really take off for you unless you have great organization. So again, get with your advisor, depending on the type of business that you have, whether you're selling, widgets, whether you're in manufacturing, whether you're a service, retail. Find out what the best solution for you is to gather all of your information, right? We go to the store, we have vendors, suppliers, we're buying things, we're collecting information, paperwork. We have to have the ability to scan that information as a permanent record, right? Because we always want to be what? Audit proof, right? So we need that documentation, number one, for peace of mind. I want to go to sleep not worrying about where is that receipt, right? No, the receipt is gone. It's not gone. You scanned it and you shredded it, but it's saved in the cloud. So organization is number one. And with good organization, guys, you're going to be able to categorize all of this documentation to create financial statements, right? This is the roadmap of your business that it's telling you, how did you do, right? The P&L, where am I at this point in time, which is the balance sheet. And of course, a third financial statement I think most small business owners miss is the cash flow statement, right? Which is the statement that tells you, where's your cash? Where did it go, right? Did it go mostly to operational? Did it go to investment activities, financing, maybe equipment? This is an important financial statement so that you can really track where your money's coming in and out of, guys. Those are the 3 big ones, right? In terms of financial statements. So right now we've covered entity structures, critically important at the start. Number 2, organization and, making sure you have a system that gets all your receipts, is you're able to gather them and then structure them, right? So that you can create the 3 important financial statements, which are the P&L, the balance sheet, of course, the cash flow statements. Now, all of that together is going to allow you, here's the bonus, guys, number 3, KPIs, right? To be a great CEO for your business. Guys, I don't care if you're running a $100,000 business, $1 million business, right? Or a multi-million-dollar business. And actually, the bigger you get, right? If you sit down and watch, some, investment channels and things like that, I won't list any of them, right? You watch the ones that you like. You'll see that they talk about key performance indicator. There's always a key number or two or three for a business that investors track to see, how this company is doing and where they can improve. So again, key performance indicators. By you having a great organizational system and being able to categorize that to generate the financial statements, you're going to be able to get into the habit of looking at these numbers. Now, again, you might say, wow, this is scary. I've never looked at a financial statement before. That's okay. It's called learning, right? I guarantee you after maybe 2 or 3 reps, of you looking at financial statements, month 1, month 2, month 3, and you look at that percentage column, it's so important, right? You can create financial statements where you're just looking at numbers and you'll see, for example, oh, my cost of goods was, $100,000. Well, what does that $100,000 mean, right? My payroll expense was $62,000. What does that mean? It doesn't really mean much because it's just a number. However, if you assign a percentage, what percentage of this particular expense is related to my revenue, and all of a sudden you find out that, wow, 60% of my revenue is going to my payroll, that's going to be an eye-opener for you to say, wait a minute, maybe, I got too many people. Maybe I need to increase my prices. There's something going on, right? Key performance indicator that you're going to just sit down and address it right there. And instantly, right? This is the beauty of it, right? Instantly, without looking at making another sale, doing anything different, you're actually going to become a lot more profitable, because what you're going to do is when you look at this number such as payroll, you're going to be able to say, listen, I either need to get with my sales team to sell some more because this payroll percentage is way too high, or I need to increase my prices because actually I've set the price too low. Or listen, you might be overstaffed. Maybe you have some idle people, right? Which could be possible if you're getting ready for growth, right? So maybe a company that's been around 2, 3, 4, 5 years, sometimes we have to bring people that are ready. They got a certain skill set and talent ready for that new business to come in. So when it comes, you're not backlogging yourself, right? Creating a bottleneck, you're ready to rock and roll. So that's how important these numbers are, guys. So again, listen, you're a small business owner. I don't care if you're just starting out or if you've been in business for a while and things are just, it's that repetitive cycle of every 12, 13, 18 months, you're like stuck. Like, why am I not moving forward year over year? Guys, I guarantee you need to stop, take a break, put the brakes on, right? Boom. Look at, am I in the right structure that's causing me to be more profitable, that's allowing me to be more strategic with my taxes and save a lot of money on taxes? Do I have the right organizational systems in place that's allowing me to gather my documents, put them in a system, a machine? I don't care. Listen, I don't care if it's QuickBooks. I don't care if it's Excel. Doesn't matter. Do I have it to put into a system that allows me to create reports such as a profit and loss, balance sheet, and of course, cash flow statement that's going to allow me to review this stuff, right? Analyze it and look at key numbers so I can make adjustments. Guys, timely adjustments. Boy, this might be number 4, right? Super bonus here, guys. The key is timely adjustment. There's a difference between 2 businesses, one being totally, closed-minded, just doing what they do. And here's another one that's just going. But because they're looking at information and making timely adjustments, that's how you separate yourself. I'm telling you, it doesn't take much. It's actually quite simple. Is it easy? No, it's not easy. Why? Because a lot of the times we get in our own way. We want to cut a lot of corners. And once we put these systems together, everything's very automatic, very repetitive. And because we start doing it consistently, it becomes a routine, second nature to us. We don't have to think about it, guys. So listen, do yourself a favor, get these things under control. You're going to do yourself a favor. You're going to do your business a great favor, and you're going to thrive for a very long time.